Now, you cannot be creating expert advisors or trading strategies without taking into consideration appropriate risk management techniques. So in today's tutorial, we're going to be going through the very basics on how we calculate risk management and then apply that to our very own risk management expert advisor, which we'll be creating. And then we're going to go all the way to applying those risk management techniques within our advanced MetaTrader 5 expert advisor series. And that means that this is going to be the final piece of the puzzle where we're going to be incorporating risk management into our expert advisors, where by the end of this tutorial, we're going to have 5 advanced expert advisors that utilize various different ways to calculate risk management. So if this is the very first time that you've stumbled across this series, then I do recommend that you go and watch my previous videos when you do get the chance. So thus far in this advanced MetaTrader 5 series, we have been able to create our very own multi-symbol expert advisor, which allows us to trade multiple symbols at the same time. For example, 28 Forex currency pairs. We've then also utilized an indicator library where we have coded up all of our indicators and our indicator conditions. So that way we can not only use the library to store all of our indicator and conditions, but also utilize the library to do optimization for our indicators as well. Not only optimizing the indicator parameters, but also the indicators themselves. And now this is where we're going to add in our very own risk library, where we're going to code up all of our functions and various functions which we are going to utilize to calculate risk, so that we can call upon those functions within the risk library within our very own expert advisors. Now, this is of course my longest video yet, which I'm sure you can see, however, with good reason. And that is because risk management is the most important aspect when it comes to trading, and it cannot be taken lightly. So first off, as mentioned, let's start off with the basics. So let's go through exactly how we calculate risk. So I've just got the iPad open here, and this is going to be very helpful for us to be able to see what the actual formulas are and actually write them down. Again, we're starting at the very basic level. So this is going to be the universal formula to calculate risk management within, well, whether it's Forex trading or trading in general, this is the universal formula. So this is of course going to be our risk amount, basically how much dollar risk is on the table. That is going to be equal to our distance. And that's basically the distance between the entry price and our stop loss price, multiplied by our position size. Now, this is the very basic calculation to risk management. However, in Forex, we need to be taking into consideration our currency conversion when we're trading different currencies that are different to our account currency. So I'm going to also add in a conversion, so multiplied by a conversion. Now, of course, if you're not trading Forex, you're trading stocks, then you won't need this conversion. Unless you're trading international stocks and you want to be doing a conversion, then yes, you would need this conversion. Now, this is the formula. It's quite simple. And what I'm going to do is name these variables the exact same variables that we're going to be using when we actually code this up, just to make things a little bit simpler. So our risk amount is going to be the same. Risk amount is going to be, well, risk amount. And that is going to be equal to our distance. We're going to call our distance our risk in points. Our size is going to be our risk in lots, because of course we are using this for Forex. And then finally, we've got our currency conversion, and we're going to call this our point value. And so this is the exact formula and variables that we are going to be using for our code today. Now, a few things to keep in mind. One is our point value, which is this one here. This is something that is going to be known to us at all times, because it's based off two things: the symbol that we are trading, and of course our account currency. So all of these is going to be known to us. So that's relatively easy. We know how to get that, or we will know how to get that, so we don't have to worry about that. Now for the remaining 3 variables, this is where risk management comes in, and this is the fundamentals of risk management. When we are managing our risk, we need to make sure that we're taking into account these 3 variables here: risk amount, risk points, and risk in lots. And typically when we are doing risk management, or when we're trading, or we're developing an algorithm, we would require 2 of these 3 variables to be known to us. So for our risk amount, typically we would know what our risk amount is based off a percentage of the account, or a dollar risk that we're willing to risk each and every trade. That is how we would typically know our risk amount. Our risk in points. Now our risk in points might come from, for example, a stop loss distance. Now our stop loss distance might be from an indicator, particularly an on chart indicator. And that's when we're looking at price to a known stop loss level, for example, price to a simple moving average or another indicator. There's also another popular indicator that is used, and that is also an ATR indicator, which is looking at price relative to the volatility of the market, and you can calculate your stop loss using that. Now the third option is we've got here our lot size, and typically we might have our lot size set to a particular variable. Again, this might be a fixed lot, where we're only trading, for example, half a lot, 1 lot, or whatever the case is for the entire strategy. And then we're setting our stop loss based off that condition. So these are the typical ways that we would know these 3 variables. However, we wouldn't know all of these 3 variables at once. Again, typically we need to make sure that we have 2 of the 3 variables known at all times for all types of trading strategies. That is the bare minimum. And then for the final variable that we don't know, that's when we of course do calculations. So we got 3 different scenarios here, 1, 2, and 3. So scenario 1 is of course our very basic, where we've got our risk amount equals our risk points multiplied by our risk lots multiplied by our conversion, so our point value. So that's our very first calculation. When if we need to find our risk amount, well, we need to know our risk in points, our risk in lots, and of course we already know our point value. The second option is we calculate our risk in points. So that is our stop loss distance. And quite simply, our risk points is equal to our risk amount divided by, in brackets, our risk in lots multiplied by our conversion, or our point value. Of course, very basic math, but that is our second option, where we're trying to find our risk in points, or how much distance our stop loss needs to be, based on the known values of our risk amount, our risk in lots, and of course our point value. Now the very final equation, which is equation 3, we have here our risk in lots. And that is going to be equal to our risk amount divided by our risk in points times by our point value. And this by far, item number 3, is, well, what I personally use the most, and what most traders will personally use the most, where we want to calculate our appropriate lot size based on the risk amount, or how much we are willing to risk each and every trade, as well as our risk in points, which is basically our stop loss distance. And again, our stop loss might be from a indicator, which is on chart, or a volatility indicator like the ATR. So we've calculated 3 different scenarios on how we actually calculate risk. So what we can do is apply that within MetaTrader itself and actually code up those different scenarios. So let's go into MetaTrader itself and start coding up our very own risk management expert advisor. So with MetaTrader open, we're going to go to File, New File, Expert Advisor Template. We're going to hit Next. We're going to name our expert advisor. We'll call it Risk Management Expert Advisor. Next, Finish, and that creates our expert advisor. For this particular expert, we're only going to use the onInitialization function or onInit function. So we're going to remove everything else underneath the onInit function, so the onDinit function and onTick functions. I'm also going to create a new section just before the onInit function, and this is going to be a section that we're going to add in our global variables. I'm going to call this expert setup. So that means we can declare some of our global variables. I'm going to declare the current symbol, which is equal to the symbol that's being traded. I'm also going to declare 3 variables, which is risk in lots, risk points, and risk amount. And these are the same variables that we discussed on the whiteboard, which is going to be the focus of this particular section of this tutorial. So with our global variables set up, we're going to go down to the onInit function. I'm just going to add a line there. I'm going to remove this, and I personally like the brackets to be here. And now we're ready to start some coding in the onInit function. The very first thing I want to do in the onInit function is just to print out for the user what the account currency is, and this might change depending on the account currency that you're trading with. In my example, we're going to be using the United States dollar as the account currency. I'm also going to print out the current symbol that is being traded, and that's going to print in the journal within MetaTrader. So the very first thing that we need to do is actually find the value in the account currency of a 1-point move in the current currency that is being traded. Now this is very important because within Forex we might be trading a variety of different currencies, and those currencies may be different to the currencies that's being traded against our account currency. Of course, when we're trading, we need to make sure that our risk is being managed against our account currency. And so this is what's being done in this particular section of this code. Of course, if you're familiar with Forex, you would already know that this is very important. So what I'm going to do is add in the following variables. The first variable is going to be the tick size. We're doing the same thing for the tick value. So this gets the tick value for the particular symbol, and also the point amount, which is getting the symbol's points amount for the particular symbol. So with these variables, we can do a couple of calculations. The first calculation that we can do is getting the ticks per point, which is simply the tick size divided by the point amount. And this ensures that we are taking into account the symbol tick size compared to the point amount. Typically they are the same, so this calculation is going to be equal to 1 in most cases. However, just in case, it's good to do this calculation. Now that we've done that calculation, what we can do is find the point value, and this is going to be the tick value divided by the ticks per point, which we've just calculated above. And this is going to return the size of a single point move for the currency that is being traded against your account currency. And this basically acts as our currency conversion. What I'm going to do for the user's benefit is to simply print out the tick size, the tick value, the point amount, the ticks per point, and then finally the point value, which is the most important one, within the journal within MetaTrader. And we'll go through exactly what that looks like when we complete this first part of the expert advisor. Now with our currency conversion or point value calculated, we can now start going into our 3 scenarios. Our first scenario is going to be finding the optimal risk amount using the risk distance in points and our lot size. So for this particular example, we're going to assume that we have a risk in lots already defined, and we're going to define that as 0.6 lots, and a risk points, which is going to be 75 points, which is going to act as our stop loss distance in points, which is 75. So then referring back to what we discussed on our whiteboard, our calculation here is going to be our risk amount is going to be equal to our risk in points multiplied by our risk in lots multiplied by our point value, being the point value calculated in the section above. And this is going to be our currency conversion, of course. Now for this particular case, our risk amount being denoted against our account currency, meaning that this is our risk amount in dollars, we're going to normalize this to 2 decimal places. Now finally, again, just for the purpose for the user to ensure that the calculations are working, I'm going to add in a print statement where we're going to be printing out the current symbol, the risk in points, the risk in lots, and then of course the risk amount. I'm going to compile this, and that compiles. So now I can move on to our second scenario. Now in this scenario, we are going to find the optimal lot size using the risk distance in points and the risk amount. So that means we have a already defined risk amount. Let's assume that that's $100. And we already have a risk in points, or our stop loss distance in points, which is going to be 75 points. Now using the calculations that we've already defined on the whiteboard, in this scenario, our risk in lots is going to be equal to our risk amount in dollars divided by our risk points multiplied by, in brackets, our point value. And this is going to give the appropriate lot size that we need to be trading. Now, because this is going to be a lot size, what I'm going to do is normalize this to 2 decimal places. Now, similar to above, what I'm going to do is add in a print function where I'm going to be printing out the current symbol, the risk amount, the risk in points, and then finally the calculated lot size. And now finally, we're up to our third and final scenario, where in this scenario, we are going to be finding the optimal risk distance in points using a defined lot size and a defined risk amount. So in this example, we have a defined lot size of, let's say, 0.6. We have a defined risk amount of, let's say, $100. So that means for this particular calculation, using the same calculation that we've done on the whiteboard, we've got a risk points is equal to our risk amount divided by, in brackets, our risk in lots multiplied by our point value. Now, again, because this is going to be risk in points, what I'm going to do is normalize this to 2 decimal places. Again, I am going to print out to the user the current symbol, the risk in lots, the risk amount, and then finally the risk in points, which we've just calculated. Now for this particular example, because we are running this function in the onInit function, I still need to keep this onInit succeeded. I'm just going to add in this comment here to say that the initialization has been completed. And if I compile this, I'm getting 1 error. And that is because I've accidentally put in a full stop there. Compile this, and that compiles. Clean up the code a bit. And that looks sufficient. So now we have successfully created our 3 scenarios within MetaTrader itself, within our very own risk management expert advisor. So what we can do now is go into MetaQuotes to actually test this expert advisor out, not only to test the 3 different scenarios, but test them across various currency pairs as well. So let's go into MetaQuotes and actually test out our expert advisor. Okay, so now we're in MetaTrader itself, and I've got our expert advisor, risk management expert advisor selected. And I'm going to start off with a symbol where the base currency is the same symbol as our account currency, being United States dollars. So I'm going to test this expert advisor on Euro USD first. I've got visualization mode equal to on, and I'm going to start the expert advisor. Now, of course, this expert advisor runs on the onInit function itself, so there's no point running the expert advisor because we are just simply looking at our calculations. So we can see here the print functions within the journal has printed out. Our account currency is United States dollar. Again, this might be different depending on the account currency that you have. We have the symbol that's being traded, which is Euro USD. So then we can go to our first calculation, which is going to be getting our point value. We can see here that the tick size is equal to 0.0001. Our tick value is equal to 1. Our point amount is the same as our tick size. So then our ticks per point is equal to 1. Again, that this is typically going to be equal to 1. However, just in case that it isn't, we're going to be doing the conversion here. So our ticks per point is equal to 1. So then our point value is equal to 1. Now, this makes sense because if our account currency is United States dollars and our tradable symbol that we are trading has the same base currency as the account currency that's being traded, then this value is going to be equal to 1. We'll go to another example just after this to see what it would look like if we were trading a symbol that is different to our account currency. So in our first scenario, we have the symbol Euro USD. We have a defined risk points being 75 points. And remember, this is our stop loss distance in points. We have our risk in lots, which is equal to 0.6. So then our calculated risk amount is $45. In our second scenario, we have here that the risk amount is $100 and the risk points is 75. And those are already defined. So then our calculated risk lot size needs to be 1.33. And now finally, in our third scenario, we have here our risk in lots being defined as 0.6, our risk amount being 100. So then our calculated risk points is going to be equal to 166.67. And again, our risk points is our stop loss distance in points. So that's an example of Euro USD. Let's go to another currency. However, in this time, our currency that we're going to be using is going to be different to our account currency. Let's go AUD CAD. Everything else remains the same and we can start the Expert Advisor. So we can see here in this example, if I scroll up, we've got here our account currency is USD. However, our symbol that's being traded is the Aussie CAD. If I go down to our calculations, we can see here that our tick size is 0.0001. Our tick value, however, is 0.691, whatever that is. Our point amount is the same, so our ticks per point is equal to 1. And so our point value, it's just off the screen, but I'll see if I can... there you go, show you that our point value is equal to 0.69127. And remember that this is because our account currency is United States dollar. However, we are now trading a different currency where the base currency is different to our account currency being the Canadian dollar. So that means that our calculations are going to be a little bit different. Where in our first scenario, we've got here AUD CAD, where we've got the symbol AUD CAD, of course. Our risk points is defined as 75. Our risk in lots is equal to 0.6. So in this particular example, we are risking $31 US. And remember, the risk amount is always denoted as the same amount as our account currency. We can see here in this second scenario where our risk amount is defined as 100 United States dollars. Our risk points is 75 points within the symbol that we are trading. So then our risk lots is going to be 1.93 lots. So that is going to be our lot size. In our third scenario here, we've got here our risk lots being defined at 0.6, our risk amount being 100 United States dollars. So the risk in points, or our stop loss distance for the symbol that we are trading, is going to be 241.1 points. Now finally, we can go and do another example where we might have, instead of UAD CAD, we might have UAD JPY. And in this example, I want to purposely test a Japanese yen pair. Everything else remains the same, so I'm going to start the Expert Advisor. So we can see here the account currency remains the same, but our tradable symbol now being tested is AUD JPY. So going to our scenarios here, we can see here that the difference in this scenario is that our tick size is now equal to 0.001. And the same with our point amount being equal to 0.001. And this is because with Japanese yen pairs, the amount of digits that is shown on the pairs are different compared to some of the other symbols that are being traded. However, the good thing about these calculations is that you don't need to worry about it because all of that is taken into consideration when we are using these calculations. So we can see here that the tick size being 0.001, the tick value being 0.977, our point amount is the same as our tick size, so the ticks per point is equal to 1, and therefore our point value, which is just off the screen, is the same as our tick value here. So in our first scenario where we've got a defined risk points being 75, our risk lots is 0.6. The risk amount in this example is 43.98 United States dollars because the risk amount is always denoted in our account currency. We can see here that in this scenario for $100 worth of risk and risk points being 75, we can see here that we need to be trading a lot size of 1.36. And finally, for our last scenario, with our risk lots defined, our risk amounts defined, we have here our risk points being 170.52 points. So now we've successfully created our expert advisor where we can take into account 3 different risk management scenarios. However, to be honest, it's not actually that practical. What we need to do is actually take into consideration our entry price and our stop loss price, which is going to give us our risk distance. And that is how we're going to be able to then calculate our risk in points. So what that means is we're going to be adding in a few more variables. One, of course, is our entry price, and then the next is our stop loss price. And then finally, we also need to take into consideration the direction that we are actually taking the trade, because depending on the direction is going to depend where our stop loss is actually positioned. And so we're going to go back into MetaTrader to take this all into consideration. So back within our expert advisor, we're going to go ahead and declare some further global variables in our expert setup section. So the variables that I've declared is the entry price, the stop loss price, and then finally the order type, which is also an input function where the user can select an order type equal to buy or an order type equal to sell, depending on the different trading scenarios that the user might have. So going down to our onInit function, one thing to note in this particular section, our scenario here where we're calculating the point value does not change. The point value does not change respective to our entry price, stop loss price, or the direction that we are trading, so all of this remains the same. I'll then go down to our very first scenario where we're looking to find the optimal risk amount using our risk distance in points and our lot size. Now, one thing to call out here is that our risk distance in points is going to be now derived from our entry price and our stop loss price. So I'm going to add in the comments here that our risk distance in points is going to be from our entry price and our stop loss price. So that means that we have our lot size already defined. However, our risk in points is not defined. We have to calculate that based off our entry price and our stop loss price. So that means that we would have a already defined entry price, and let's assume that it's going to be 1.00075 and a stop loss price of 1. Now, just one thing to call out here is that when we are testing this particular expert advisor, we need to ensure that our entry price and our stop loss price is respective of the amount of digits that's being traded for the symbol that is being traded. So in this example, this 1.00075 is going to work for any currency that has 5 digits. So this is typically all the currencies except for the Japanese yen. If we want to use this expert advisor for testing purposes for a Japanese yen pair, we need to ensure that we change this to something that's more relevant to a Japanese yen currency. So we can use this example here where our entry price is going to be equal to 100.075. Now with our entry price and stop loss price defined, we can calculate our risk points. We can quite simply do a calculation of our entry price minus our stop loss price defined, which we have done here, entry price minus stop loss price. However, this calculation of entry price minus stop loss price is going to calculate our risk distance against the price of the symbol being traded. However, we want price to be denoted in points. So what we need to do is divide this value here, our entry price minus our stop loss price, by our point amount. And that point amount is going to be coming from our first scenario here. So we can simply copy our point amount and then divide our entry price minus our stop loss price, which is the distance in price, by our point amount, and that is going to get our risk distance now in points. Now, the last thing that I want to do is get the absolute value of this calculation, and that is done by going math, ABS, and I'm just going to put brackets around all of that and then add our semicolon. And I'll bring that up. Now quickly, what math ABS does, or the absolute value of this particular value that we have here, is it removes any negative values that we might have, particularly from taking the difference between our entry price minus our stop loss price. Now in this particular case, where we've got an entry price of 1.00075 and our stop loss of 1.0, our entry price minus our stop loss price is going to be a positive value. And this is going to be typical for long trades where our stop loss is below the entry price. However, for short trades, our stop loss price is actually going to be above the entry price. So it's not going to be equal to 1, it's going to be equal to some other value. And so that means that this calculation will be negative. And to ensure that we're not throwing off any of our calculations, we need to remove that negative sign. So we do this function, math ABS, or absolute value, and that removes the negative sign from this particular calculation. Now finally here, I want to update our print function where we've got here our symbol, and then before we've got risk points, I'm going to add in our entry price, our stop loss price, and then we're going to have our risk points. I'm going to compile this to ensure there's no errors, and there isn't. And that is how you calculate this particular scenario now using an entry price and a stop loss price. Now in our second scenario, we are looking to find the optimal lot size using our risk distance in points and our risk amount. However, again, in this scenario, our risk distance in points is going to be calculated by using the entry price and the stop loss price. And this is actually going to be the same changes that we have done in our first scenario. So this is going to be quite simple. So that means that our risk in points is no longer defined. So I'm going to remove that. I have included now our entry price and our stop loss price, which is the same values as what we have defined previously. So then that means our risk points is going to be equal to the same calculation that we done before, where we're taking the difference between our entry price and our stop loss price, and that gives the risk distance in the price. We then divide that by the point value to get our risk distance in points, and then we remove any negative symbols by using the math ABS function. Similar to before, I want the print function to call out our calculations, where we've got our entry price, our stop loss price, also called out within the function. I'll then compile this. That compiles, so now we go on to our final scenario. Now, this scenario is going to be a little bit different. We're going to find this time the optimal risk distance in points using the lot size and the risk amount that's already defined. So we're actually using the risk in lots and the risk amount to find the risk in points. And then what we need to do is find the optimal lot size. So we're kind of working a little bit backwards here. We've got here a already defined risk lots and already defined risk amount. We then find out our risk in points, or the distance that our stop loss needs to be. And then we are going to find our stop loss price. So that means that these calculations here remain the same. We find our risk in points, and then we find our stop loss price, which means that our changes are going to happen after this calculation is done. The very first thing I want to do is declare a new variable called symbol digits, which is going to be equal to symbol info integer in brackets, the current symbol, and then the symbol digits. And this is going to get the amount of decimal places for the current symbol that is being traded. Similar to previous, we've got here a defined entry price. Let's assume that to be equal to 1.00075. And this is where we have two different scenarios. The first scenario is if our order type is equal to order type buy, meaning that we are going long for the trade, we have a long trade, then our stop loss distance is going to be equal to the entry price minus our risk in points. So our stop loss is going to be below the entry price. Of course, that is what we would be doing when we are buying. Again, our stop loss is denoted in price, our entry is denoted in price, however, our risk amount is denoted in points. So what we need to do is actually convert our risk in points to our price. So that means we need to multiply our risk in points by our point amount. I'm going to put brackets over this. And so this is going to convert our risk in points to a risk in price, basically, for us to do this calculation to find our stop loss price. Now, again, I'm going to normalize this calculation here. However, I'm going to normalize this to the symbol digits, which we have declared above here. And this is going to normalize this stop loss price to the amount of digits that is required for the symbol that's being traded. And this is going to take into account digits for different types of symbols, for example, Japanese yen pairs versus other pairs. Now I can also add in an else if statement where if our order type is equal to order type sell, that means our stop loss distance is equal to pretty much the same calculation above. The only difference is our stop loss price is going to be above our entry price. So we have a plus symbol instead of a minus symbol. Now, if for whatever reason our order type is not equal to the order type above, which in various scenarios you might have different types of order types, which is completely warranted but out of the scope of this video, then our stop loss is going to be equal to 0, meaning that we are just going to return an error. So that means with our updated print functions here, all of this remains the same. However, we now have our calculations after the fact, where we now have our entry price and our calculated stop loss price, which is calculated from our risk points that was calculated before. Just clean up this code, compile this, everything compiles, and all the code looks fine. So this should be everything that we need to take into consideration our entry price and then our stop loss price. From there, we can then find the risk distance and convert that to risk points. And then finally, the position direction for the trades that we are taking. So let's go and test our Expert Advisor out within MetaQuotes itself and actually see how this actually functions. So we're now back into MetaQuotes itself. We've got our Expert Advisor selected. I'm going to go back to our very first scenario, which was Euro USD. Again, everything else remains the same. Visualization mode is equal to on. I am going to start. So we can see here that our current currency remains the same, USD. Our testing symbol is Euro USD. Notice here that our calculation for our point value remains the same, being equal to, well, point value of 1. And that again is because our account currency is the same as the base currency of the symbol that's being traded. So again, double check that that's all the same. However, this is where things get a little bit different. We have here in our first scenario, we now have an entry price of 1.00075. Our stop price is equal to 1. So our risk in points is equal to 75. We have here our risk in lots is equal to 0.6, and it's just off the screen. But here we've got a calculated risk amount of 45. Now for the particular entry price and stop loss price I've chosen, it should actually be the same calculations as what we had in the first scenario, because our risk points is calculated to be the same as what we calculated in our first scenario before we added in the entry price and our stop loss price. So this is a good way just to make sure that your calculation is working appropriately. Again, if you're using an account currency of USD and our tradable symbol is Euro USD. So in this particular scenario, again, for our entry price being 1.00075, our stop price is equal to 1. we've got our risk amount being defined as 100. Our risk in points is then calculated as 75, which is again from our entry price and our stop loss price. Just off the screen, that means that our risk in lots is equal to 1.33. And finally, for our third scenario, our risk lots is defined as 0.6. Our risk amount is also defined as 100. So then our calculated risk in points is equal to 166. However, in this particular case, we want to then find our stop loss price. So then we've got our entry price being 1.00075. So then our stop loss should be equal to 0.99908. So let's go into another example being AUD CAD. So in this example for AUD CAD, our point value should be the same as what we calculated previously, which is about 0.69. It's just off the screen here, but it's the same as our tick value. So in our first scenario, we have here our entry price being 1.00075, and note that this is our entry price for the symbol that we are trading, which is AUD CAD. Our stop loss price being equal to 1, our risk points being equal to 75. So note that these are the same values that we passed through previously. The only difference is we are trading a different symbol. Our risk in lots is defined as 0.6. So if I just go off the screen, so it's just off the screen here, but our risk amount is equal to 31.11. Our second scenario, where our entry price is 1.0075, our stop loss is 1, our risk amount is 100, our risk points is the same, so it's 75. Our risk in lots is then calculated to be 1.93. Again, that should be the same as previously. Finally, for our third scenario, with our risk in lots being 0.6, our risk amount being 100, our calculated risk in points, or our stop loss distance in points, should be 241. So from there, we can then find our stop loss distance, which is going to be our entry price being 1.00075 minus our risk in points, which is giving us a stop loss of 0.99834. Now, finally, we have our third scenario, which is going to be AUD JPY. But remember, I mentioned if you want to test JPY pairs, you need to go into the code and actually change some of the values. And that is the entry price and the stop loss values. So if we're using JPY pairs, we need to ensure that we're using the appropriate digits, which means that instead of 1.00075, we're going to be using 100.075. And instead of 1.0000, we're going to be using 100.00. So I'm going to copy all of this just to make things quicker. I'm going to add that to that. And our entry price, we only need to copy over our entry price for this particular scenario. Compile. Perfect. So now I can test this for our JPY pair. So for our JPY pair, we've got here our tick size, tick value, and our point value here. Again, this should be the same as previously, so I won't go through that. Just notice here that the digits is now different. We've got here our entry price being 100.075, our stop loss being equal to 100. So then our risk in points is equal to 75. Notice here that this is now denoted in the points as denoted by the symbol that we are trading, which is the Japanese yen. So then our risk in lots is defined as 0.6. So then our risk amount, which is just off the screen, is equal to 43. In our next scenario here, we've got our Japanese yen pair again for our entry price of 100.075, our stop loss being 100, our risk amount being 100. So our calculated risk points is 75. And then that means our risk in lots is equal to 1.36. And then finally, in our third scenario, we've got here our risk in lots being 0.6, our risk amount being 100, our risk points being 170.52. So then from a defined entry price of 100.075, our stop loss should be equal to 99.94. Now we've assumed all long trades. We can go in here and then go and then change this order type buy to order type sell. So we're doing calculations for short trades. The only difference is again, I have to go into my expert advisor and I have to change the position of our entry price and our stop loss price. So let's assume our entry price is now 100. However, our stop loss price is 75. So again, this should be 75 points away. So our calculation should be the same, which is why I'm purposely selecting this just so our calculations can remain consistent. And then in my final value, our entry price is going to be equal to 100. So this is important because of course, if we're going short, then our stop loss price needs to be above our entry price. So if I compile this compiles. Let's go back to our expert advisor with the same Japanese yen pair. However, with an order type sell, I'm going to run the expert advisor. So here you can see that the point value remains the same. We've got here our entry price being 100, but our stop loss price being 100.75. So then our risk in points again is 75. Our risk and lots remain the same. So our risk amount is equal to 43.98. And this should be the same 43.98 that we calculated previously in our long scenario. And so that's how I know that everything is working. In our second scenario, we've got a stop loss. Our entry point's 100. Our stop loss is 100.075. So then our risk in points remains the same. For our risk amount of 100 United States dollars, our risk in lots is equal to 1.36. In our third scenario, our risk lots defined as 0.6, our risk amount being 100. So our risk in points is equal to 170.52, which is the same as what we have calculated previously. However, in this scenario, our entry price is now 100. And so our stop loss price is going to be 170 points away from our entry price. And we can see here in this calculation, it actually works quite well. That our stop loss, we can easily see, is 171 rounded points away from our entry price. So that now completes our 3 different scenarios, taking into consideration the various changes that we have just made, which is our entry price, our stop loss price, and our position direction. So now what we can do is actually include these different scenarios within our very own risk library. And this is going to be so important for us because we'll be able to call upon these functions anytime we create a new expert advisor. And we're going to utilize these functions in our very own risk management expert advisor that we, of course, are creating now. And this is going to be extremely beneficial because any future risk management techniques or functions that we want to utilize, which is going to be quite a few more following in this tutorial, we're going to be able to code them up within our risk library. So let's go back into MetaTrader and actually code up our very own risk library. Within MetaEditor, we're going to go to File, New. Now this time we're going to create a new library. So we're going to select library. Next, we're going to name our library and we're going to call it risk library. Finish. And that creates our library. I'm going to remove this commentary here, my functions, remove all of that. And I'm going to replace this section here with some of my own commentary. So I've added my own commentary here. And I've also changed this version to version 1.01. Now, before we get into creating any of our custom functions, I am going to include the trade library. Now, this is going to be very important because we're also going to be using this library to process trades. As such, we need to include the trade library into this particular library. So now we can create our very first function, and our very first function we're going to create is actually to get the point value. Now you recall that the very first step that we did when creating our expert advisor just before is that we need to find the value in our account currency of a 1-point move for the current symbol that is being traded. And we're going to call get point value, which is going to return the point value. And all we need for this particular function is the current symbol. So what I can do is go over to our code. And here is that function that we created before. So I can quite simply copy all of this code, go into our newly created library, paste the code in, and I'll just space this out just to make things cleaner. We're going to print that. And then finally at the end, because we need to return a value, we're going to return the point value itself. Now, just to make sure that everything looks fine, again, the only thing that we're passing through into this function is the current symbol. So our tick size is equal to this function and we're passing through the current symbol. Same thing with tick value, there's the current symbol, and the point amount, and here's the current symbol. The ticks per point is based off these calculations, tick size, which is this one, and point amount, which is this one, so that all looks fine. And our point value is based off the calculation tick value, which is this one, and our ticks per point, which is this one. So everything here should work fine. I'm keeping the print functions in here just so that we can use it for error testing. Once you're comfortable with the particular code, you can of course comment this out to reduce the amount of print functions that you get within your journal. If I compile this, this compiles, and that was very straightforward. Just one thing to note here, that I am not using this function as a export function. I'm going to keep this local within the library itself, so we don't need to pass this through to our expert advisor. The next thing that we need to do is pass through our very first scenario. And the very first scenario we have is to find the optimal risk amount using our lot size and our risk points, where our risk points is from our entry price and our stop loss price. So we're going to call this new function get risk amount. And of course, we need to pass through the current symbol. We need to pass through the entry price and the stop loss price as defined here. With this entry price and stop loss price, we'll be able to calculate the risk in points, so that's fine. And then finally, we need to pass through the risk in lots, which is this one here. So that looks to be all the variables that we need to pass through this function. So if I go back to our expert advisor that we just created, here's our first scenario. So I'm going to copy everything in here. And although we're not going to need all of these, I'm just going to copy it to make sure that we can cross-reference everything that we have calculated previously is going to be accounted for within our new function. So I'm going to paste that within here. I'm going to space out the print function just so it's a bit easier. And here is our calculations. Now our risk in lots is defined up here, risk lots, so we don't need a variable for that. Our entry price is defined here, so we don't need a variable for that. Our stop loss price is defined here, so we don't need a variable for that. Now we have here our risk points is equal to math ABS, which we discussed, our entry price and our stop loss price, which is defined. However, we do not have a defined point amount within our function. Now, previously we had in our expert advisor, we had the point amount actually coming from our calculations over here, which is from finding our point value. However, in our new library that we have created, our point value is now a separate function to our newly created function get risk amount. So all that means is that our point amount, which we are using here, will need to be declared as a new variable within our function. So what I can do is simply go up here and steal the point amount. Just copy that code, go back to our get risk amount. And just before we calculate our risk points, we need to define the point amount. So the point amount is equal to our symbol points for the current symbol, and that's the current symbol that's being passed through here, so that looks fine. So this looks like all the variables have been accounted for here. I just need to declare this as a double, and that is looking fine. Now finally, our risk amount is equal to our normalized double, so risk in points, that's defined here. Our risk in lots, which is defined up here. And then finally our point value. Now again, our point value was calculated previously from this function of our point value, and then we use that point value amount in this calculation here within our expert advisor. However, again, within our library, we don't have the point value defined. However, what we have done is created this function here called get point value, which returns the point value after doing all of these calculations. So we can simply copy this function, go back into our newly created function get risk amount, and I'm going to create a new double. Point value is equal to our newly created function. I don't need to pass through this double. I just need to pass through the function, and I don't need to declare that as a string. And then I need to close that. And so this point value is the same point value as this item here. Of course, I need to create a double for this. Risk amount is equal to this function. Now that looks like everything is accounted for and calculated for, so that looks fine. The last thing that I need to do is, of course, return the value. So I'm going to return our risk amount. I'm going to hit compile, and that compiles. And so that's how easy and how clean it is to get our risk amount. So we're going to go on to our second scenario here, where we're going to need to find our lot size, where we're going to find the lot size from our risk amount and our risk points, where we get our risk points from our entry price and our stop loss price. Again, we're going to call this get risk in lots, and we're going to pass through the current symbol, the entry price, the stop loss price. However, this time we are now passing through the risk amount. This looks very similar to what we had previously. However, the only difference is we had a defined risk lots in our first scenario. In this instance, we have a defined risk amount. So again, I'm going to go to our expert advisor that we were using before. I'm going to copy this code, and I'm going to paste this code here. Our print statement, I'm going to separate. Now, similar to before, our risk amount is defined here, so we don't need that. Our entry price is defined, likewise with our stop loss price. Now here we have a similar scenario where we've got our entry price minus stop loss price divided by our point amount. Again, we don't have our point amount defined locally within this function, so we are going to get the point amount similar to above and paste that here. And we are going to declare this as a double. And likewise with our risk lots, that is going to be a double. We've got here our risk amount, and that is defined above. We've got here our risk in points, which is defined or calculated above. And again, we don't have our point value, but we do have our function point value, which we did use in our first scenario. So I'll copy that and I'll paste that up the front, and I can backspace all of that. And then again, all I need to do here is return the value that we're passing through, which is our risk in lots. And that is quite simple. Now, admittedly, this is the function that I typically use the most, where we have here, of course, the symbol that we're trading. We have here a defined entry price. We also have a defined stop loss, and this stop loss could be from a moving average. This could be from a ATR, for example. Typically, a stop loss would already be defined, and we have a risk amount, which is the dollar risk that we're willing to risk per trade. And then we adjust our lot size based on our stop loss and our risk amount defined above. So this is one that I will typically be using a lot, and in our tutorials, we will be using quite a lot as well. Now, finally, we have our third scenario, which is going to be finding the stop loss. And we're going to find the stop loss by firstly finding the optimal risk distance in points by using the lot size and the risk amount. And then we're going to find the optimal stop loss. Now, for this function, we're going to call it get stop loss, which is going to be equal to the current symbol and then the entry price. However, in this instance, we don't have a stop loss, which is what we're passing through in the third variable of our functions. Instead, we're going to be passing through the order type, and then we're going to be finding our stop loss based off the order type. We've got here our risk lots are defined and our risk amount is defined in this scenario. And note here, we're using a export function, which I don't think I mentioned, but we're going to be exporting these three scenarios, of course, because these are the calculations that we need to do and export back to our expert advisor. So I'm going to go into our expert advisor that we coded up previously. I'm going to copy all the code, go back and paste this one in. I'm going to separate the print function. That's going to be print. And so we can start culling the stuff that we already have defined. So our risk in lots is already defined here. So we remove this. Our risk amount is already defined here. So we can remove this. Then we've got here our risk in points. So our risk in points is equal to our risk amount, which is defined, our risk lots, which is defined. But again, our point value is not defined. I can do what we did before and copy our point value. Paste that in here. And I need to declare this as a double. Now this was already defined as well, symbol digits. So we'll keep that as it is. Our entry price was defined over here. So we're passing through our entry price, so we can remove that. And then we've got our if statements. So if order type is equal to order type by, our stop loss is equal to, and I need to declare our stop loss as a variable first. So that's one thing to note. So quickly I'll declare at the start actually, double stop loss is equal to 0.0. So that's going to declare or initialize our stop loss variable. So then when we pass through, stop loss is equal to normalized double entry price we've got defined, risk in points we've got defined here. Our points amount, again, we don't have defined. So we need to go back up, get the double point amounts that we've used in our previous scenarios. And I'm going to put that here. So that's our point amount taken into account. And symbol digits, which we've defined here. So that's no issues at all. This calculation is exactly the same as previous: entry price, risk points, risk amount, and simple digits, which we've got defined. And if in any of these scenarios, this doesn't equal to these order types, then our stop loss price is equal to 0. So I'm just going to clean this code up a bit by just shuffling some things around. And then finally, we just need to return the stop loss value, which has been found. And that returns the stop loss value. So if I compile, that all compiles, and that's the full code there, just for you to see it in its full glory. And that seems to be all good. So we have successfully created our risk library, which currently has 4 functions. 3, of course, being our 3 different scenarios to calculate risk, and then the last one being our point value. So what we can do now is go to our risk management expert advisor and add in our risk library and our export functions that we want to pass through into our expert advisor. So let's go back into MetaTrader itself and actually add in our risk library to our expert advisor. So now we're back into Meta Editor and we're back into the expert advisor that we were creating before. Now what I'm going to do is add in a new section above, and we're going to call this our library section. And this is where we're going to import our newly created library called risk library. And the way we do that is by using #import, and we're going to import the library risklibrary.ex5. Now, if you called your risk library something different, so then make sure that you call that out here. Or if you saved it into a separate folder within your risk library, then you need to specify the location. Now, the library functions that we're going to pass through are those that we are exporting within our library. So if I scroll down, this get point value is actually not something that we need to export into our expert advisor. This is all used for the functions within the library, so it's used locally within this library. So actually we don't need to export that. And on that note then, if I go back to our expert advisor, if I go down to our onInit function, that means that we actually don't need this function here because that is all calculated within our library. So I can simply remove that. So going back to the top and going back to our risk library, let's go down to our next section here, where we've got our first scenario, get the risk amount. So we're going to export this function, which means I'm going to copy this function, go back into our expert advisor, and I'm going to paste this get risk amount function And when I am calling upon a function, I don't export it within our expert advisor. I export it in the library, of course. So I just remove that export and then I close the function. So that's our first scenario done. I'll go to our second scenario. I'll copy this function here. Go back to our expert advisor. I'll paste that function here. And again, I don't need that export, so that gets removed. And then finally, I go to our get stop loss function. And I remove that. So if I compile this, so that is our libraries imported. What I'm going to do now is make the relevant changes within our expert advisor. So in this section here, our expert advisor variables, I'm going to keep all of this as is. So that's completely fine. I'm going to scroll down. So now in our onInit function, our first print functions remain the same. Note here that I've removed our get point value calculation. So we're going straight to our first scenario. So in our first scenario, our risk lots is defined, our entry price is defined, and our stop loss price is defined. So in this scenario, I am going to remove everything except for our defined variables. And note here that our calculation that we are looking for is our risk amount. So I'm going to bring back in risk amount is going to be equal to our function now, which is get risk amount function. So I'm going to copy this and I'm going to paste it here. I don't need all of these declarations of these variables, so that means I remove string and I'm going to pass through current symbol. So I remove the double and I just pass through the entry price, which is defined here. I remove our stop loss, which is defined as our stop loss here. And then our risk and lots, I'm going to remove that, which is defined here. And that's how easy and clean it is, not risk among, risk amount. That's how easy and clean it is to now get and calculate the risk amount. I can now do something similar for our risk in lots, where we've got here an already defined risk amount, entry price, stop loss price. Our risk points we don't need. Our risk lots is what we're calculating, so I'll keep that. And our print functions we don't need. If I scroll back up, our risk lots calculation or function is this one here, so I'll copy that. Paste this here. And so we are now passing through the function get risk lots, where we are passing through the current symbol, the entry price, the stop loss price, and the risk amount as defined here. Now our very final scenario here is finding our optimal risk distance in points using the lot size and risk amount, and then finding our optimal stop loss. So our risk lots is defined, our risk amount is defined, our risk points we can actually remove because this is calculated for us within the function already. We don't need symbol digits. We do, however, need the entry price. And note here that we do need the order type. However, order type is defined up here in our global variables as order type by. So that's already defined. So I can remove that and remove all of that. I can remove the print functions. This is for the onInit function, so that remains as is. And we are calculating here our stop loss. So these are all the defined variables. Our stop loss, however, is what we're calculating for. So all we need to do is go to our get stop loss function. I'm going to copy that and paste that within here. Get stop loss is equal to our current symbol, our entry price, our order type, our risk in lots, and our risk amount. And that's as easy it is to calculate our stop loss price. And if I come back to our three main scenarios using the risk library functions, look how easy and clean it is to code up these three scenarios where we're simply just calling the functions that we require based off the already defined variables above in these three different scenarios. I can remove that. Now, one thing I quickly want to change here is previously in our testing, we were testing for Japanese yen pairs. I'm going to change this back to USD pairs, and I'm going to change this to 75. Change this to 0. So that's fine. That's that. And that's that there. So I'll compile this, and that compiles, and that completes our testing Expert Advisor. Now everything is looking super clean within our Expert Advisor because we are now utilizing our risk library. Now, if done correctly, we should actually be getting the exact same results as we were before when we didn't have the risk library. So that means we're going to go back into MetaQuotes and we're going to test out our updated Expert Advisor. Now I'm back within MetaTrader itself, and I've got our Expert Advisor selected. Previously where we left off, we were actually testing order type sell. I'm going to change this back to order type buy. And you can see here that we've got our risk management Expert Advisor selected. I want to be testing this for our Euro USD currency pair. There we go. Everything else remains the same, and I'm going to start. Now that has run our Expert Advisor. We can see here that we've got account currency equal to USD. And again, we're testing a pair where our base currency of the symbol that we're trading is the same as our account currency. So that means that our point value is equal to 1. Now our calculations would be the same. However, just one thing to note, because we are rerunning the function get point value, which is in our risk library, we're actually running the point value 3 times, which is completely fine. So that's why you see item number 0 3 times here. We can also see here that the calculation of point value looks like to be calculating fine because our, again, account currency is the same as the base currency that we're trading. Now you can see here that the entry price for this example, 1.00075, and the stop loss price being 1, our risk in points is 75, and you might note that that is the same 75 that we have used previously. Our risk lots is 0.6, so our risk amount is 45. Now, all of this is exactly the same because we have defined that within our Expert Advisor. The calculation, however, is what's important here. Now, you should be, if you're testing the exact same variables, you should be getting the same value here as 45, which, if I recall correctly, this looks like to be right. So we are actually doing the exact same calculations. However, we are now referring to those calculations within our risk library, which is really important. Same thing here for our second scenario, where we are now calculating our risk in lots being 1.33. And then finally, we are calculating our risk in points, which is 166. And then we are finding our stop loss price, which is equal to 0.99908. So this looks like to be all working. I'd encourage you to test this on different pairs. So let's quickly try AUD CAD. So we can see here for AUD CAD, there's our account currency USD. We're trading for AUD CAD. And if I scroll down to our scenarios here, we can see here the point value is now calculating, well, it looks like it's calculating accurately. We now don't have a point value of 1, we've got a point value of something else. And we've got our calculations here where our risk amount is now calculated as 31 United States dollars. We've got here our risk in lots being 1.93. And we've got here for our third scenario, our stop loss being 0.99834. Now again, these should be the same calculations as what we calculated previously. So everything looks like it's working properly. However, I'm not too happy with the current format of the Expert Advisor because the user has to go back into the code to change some of the variables depending on the symbol that's being traded, as well as depending on the direction that is being traded. So what I'm going to do is change a couple of variables, make them into input variables, which is going to finish off our risk management Expert Advisor and our 3 scenarios that we have just been going through. So let's go back into MetaTrader itself and make our final changes to our risk management Expert Advisor. Now, one thing that I'm going to do just to wrap up this particular Expert Advisor is I'm going to actually make these input functions. Now, the reason why I'm doing this now and not before is that we are recalculating our risk amount, our risk lots, and our stop loss price meaning that we cannot actually make these input functions. I'll show you what I mean by this. So if I create all of these as input functions, so input risk in lots is equal to 0.6. Our inputs risk in points, and what am I using? Risk in points is 100. And our risk, did I do that right? Sorry, our risk amount is 100. Sorry, our risk in points is actually calculated through our stop loss, of course, and our entry price. So then I actually don't need our risk in points defined anymore. Our entry price is now equal to this. That is an input. Our stop loss price is equal to this. Inputs. There we go. So let's say that this was our expert advisor, and this is how I have created it, where these are all input functions. So the user doesn't have to go in and type this out all the time. What I'll do is remove our variables here. So it's literally just this. And that's our 3 functions here. If I went to compile, I will get errors. And the reason being is that because these are input functions, risk amount, risk lots, and stop loss, I cannot recalculate these variables that are defined as inputs, which is what we were doing previously. However, what I'm going to do here is just call this double, and I'll just say calculated risk amount. And I'll do the same thing for all of these and for all of these. And if I compile, that now compiles. So we've got here our calculated risk amount, which is passing through the risk amount function. And these are the variables that we need. A calculated risk in lots. And this is the function variables that is going to pass through. And our calculated stop loss. And again, this is the function and the variables that will pass through. And so this is going to be the expert advisor that I'm going to put up for testing purposes, just so that way you can have a play around and play with the functions to ensure that all of these calculations are calculating correctly. Of course, for this to work, you will need to import our risk library into this expert advisor, which we've done here. And if I go back into MetaTrader, you can see here that you no longer have to go back into the code to get those calculations. You can simply specify the variables in here. So if you've made it this far and you've been able to create your very own risk management expert advisor, which utilizes our newly created risk library, then this is huge, because what we have been able to do now is been able to incorporate fundamental risk management techniques into our very own expert advisors utilizing a risk library. So that means now we're at the stage to actually start incorporating these very own techniques and this very own library into the expert advisors that we have been creating in this advanced MetaTrader expert advice series, where we can now build in appropriate risk management. Now, of course, we're going to be adding in a lot more into our risk library. And the first thing that we're going to do is actually transition a lot of the functions that we already have coded up within our current expert advisors and transition them across into our risk library. And that is mainly going to be our process trades functions. So now we're not only going to be calculating appropriate risk management, but we're also going to be processing our trades within the library itself. So let's go back into our MetaTrader, specifically going into our currently developed expert advisors within the Advanced Expert Advisor series, and start making the appropriate changes to now include our very own risk library. So now this is where the fun begins. We're back into MetaEditor, and we've got here our multi-symbol indicator EA version 1.01. And this is the same indicator EA that we coded up in our last tutorial when we were completing our indicator library. Well, specifically, if I go down, we were using the library to create enum indicator functions so that we can pass that through to our expert advisor input functions. From there, we were able to optimize these indicators to find the best performing indicators. Now what we're going to be doing is adding our risk management library and adding in money management into this particular indicator, so that way we can now account for risk management techniques. What I'm going to do is save this file. Now, if you don't have this file, then I do recommend watching my previous tutorial. Also going over to my GitHub to get this file. multi-symbol indicator EA version 1.01. This is the file that we will be using, as well as the indicator library itself. If I go to libraries, we've got here our indicator library, and that's also the library that we're going to be using. Now, by the time this video is done, we will also have another library called our risk library also in this section here too. So I'm going to save this, save as version 3. And this is now version notes 3. I'm also going to add a new bit of code where I'm going to specify that risk management will be taken from risk library. There we go. And that is all good. This is version 3, patch note 1. That's fine. Long shorts, blah, blah, blah. Risk and position size has no stop loss. So that may change for our strategy conditions. So I'm going to remove that. Exit trigger is also filter indicator 1. Cool. That's no issues. And that is version 3.01. Perfect. So the very first thing I'm going to do is include the functions that we've already set up from our risk library, which we did do in our expert advisor that we just created. So these are the current functions that we've got exporting out. So I can simply copy this and add this here into the expert setup section. What I'm going to do is change this around. I'll put this there and I'll put libraries. Kind of like how that looks. Yeah. I like the look of that better. There we go. So now we not only have here our indicator library that is being imported, but also we've got our risk library that is being imported too. If I compile this, that compiles with no issues. Of course, nothing really changes for now, but we're going to make those changes. So now we are going to go down and we're just going to cherry pick some of the items that we're going to need for our expert advisor. If I scroll down to the very bottom, our multi-symbol EA custom functions, we'll keep that as is. Our indicator library, we'll keep that as is. And now we've got here process trade functions. Now, some of this I'm actually going to use within our risk library. Now, we don't have this currently coded up within our risk library. However, we're going to add to it. What we haven't done is process trades. So a lot of our process trades functions within this expert advisor is going to be carried over to our risk library. So the very first thing that we're going to be carrying across is our initialization of our C trade and our magic number. And we can actually create this similar to what we've done here as a function within our risk library. So what I'm going to do is actually cut this line of code. So I've removed it, go into our risk library, and I'm going to paste the code down here. I'm going to give it a header. I'm going to call this initialization of MQL5 of MQL trade functions. And this is going to be a void initiate trade. And we're going to call the function initiate trade. Instead of ID, I don't really like ID there. I'm going to call it magic number. Just makes a little bit more sense for me. And this is going to be export. And I'm going to replace ID with the magic number. Now I'm going to put in just some print functions. I'm going to compile, just got one error. And I've done that again, compile, that compiles. Now, because this is an export function, I'm going to copy this, export code, come back to my expert advisor, and I'm going to paste this newly created code into our risk library section. Remove the export and add in that. So I compile that, that compiles, and that is compiled with no issues at all. So note here, when I go into the expert setup section, we've got here the magic number has been declared, so that's no issue at all. If I go into the onInit function, Note here that I'm passing through initialization of C trade, passing through the magic number, which is the exact same function that we have just created within this initialize trade function over here. I've now removed that function completely from this expert advisor and included it within our risk library. So anytime that I want to initialize an expert advisor, I simply just need to call this and not have to specify the entire function within the expert advisor itself. Just keeps things extremely clean. One thing to note as well, while we've initialized the C trade functionality, I also don't need this include function here. But I'm going to remove that later when we complete passing through the trades. And the reason why we don't need that is that we've got that accounted for within our risk library itself. So we're also going to be passing through all trades within the library. If I removed it now, I'm going to get some errors, so I won't do that just yet. So if I scroll down through our expert advisor, I'll go back to the bottom to see what else we can bring across. And we've got here a process trades function. So we've got here process trades open, and we've got some functions being processed in here. And again, this is a function that we can also process within our trade library. So every time that we want to process a trade, we can pass this function through. So what I'm going to do is, again, copy this entire code here. Cut that. I'm going to go back to our risk library, scroll to the bottom, and paste that in. So of course, I'm going to give this a header, process trades. And just to note here, within the expert advisor that we had before, we had no stop loss and no take profit. However, what we're going to do is we're going to be changing this within this particular expert advisor. So then we can take into account stop losses and take profits. So I'm going to remove that line of code, and I'm going to include some additional variables within this code. So process trades open is going to be equal to our current symbol. We're also going to be passing through the order type. Now recall that the ID is now actually going to be the magic number. So I'm changing this to magic number. Our risk is going to be equal to risk lots. And now we can start adding in more variables. The variables that I'm going to add in, of course, is the entry price, the stop loss price, and that's going to be used to calculate our risk distance in points or risk points. And then we've also got a take profit, which we haven't really discussed too much today, but if there's a take profit value, we can of course set a take profit price as well. Now within this function, the very first thing that I want to do is actually use our newly created risk amount function to actually calculate the risk amount for this particular trade. Now, again, we need to specify our risk in lots, our entry price and stop loss price. So with those variables, we'll be able to calculate our risk amount. So here we're going to calculate the risk amount for the user, where we've got double risk amount is equal to, and what we're going to use is the risk amount function that we've got up here. So get risk amount. So if I copy that, come down and paste that here. Again, I don't need these variable declarations, so I can remove these and remove the export. So just for the user, just so they know what the risk amount is, the risk amount is going to be equal to get risk amount of the current symbol, the entry price, the stop loss price, and the risk in lots, which is all defined above here. And so that's all calculated fine. So in the next section of the code, we've got some variables where we've got symbol digits. We've got the price, our stop loss price, and take profit price. Now note that these are already defined going into the custom function. So what I'm going to do is actually remove the stop loss price and take profit price here because we don't need that. However, I'm going to keep this code where we're calculating the entry price for the expert advisor. I'm not going to keep it within this custom function. I'm going to actually remove this because again, this is already calculated for us going into the function, but I'm going to paste this in a new section below because I'm actually going to create this as a new function. So I'm going to come back to this in just a moment. So scrolling back up. Here we can now see that we've removed all of that code relating to finding the entry price and declaring the stop loss and take profit prices. So all of that removes. So when we process a trade, we basically call this function, we calculate the risk amount for the user, we close any current trades that are currently open for this particular symbol, and this is using a function called trade.processClose on the current symbol, so that's fine. And note here that this is using the included trade functions, which we have declared already using the trade library. So that's fine. We're setting the expert's magic number, and then we're entering the trade using the trade.positionOpen function, again within the trade library. And this remains consistent because this is already defined in the trade library, where we're passing through the current symbol, the order type, which is defined, the risk. Note here that this needs to be changed to risk lots. Previously I had risk, so this is the lot size. The price is actually the entry price, so I need to change that. Stop loss and take profit price is the same, and this file remains the same. So this function here is already set up and remains as is. And we've got here a print function just to make sure that everything is okay, which it looks like everything's fine. So that looks like that all works. So now just to go back to this function here, which is going to be getting our entry price. Now this is going to be important and something that we're going to use quite often, because we are going to need to get the price or get the entry price every time that we are looking to process a new trade. However, instead of processing the entry price within our process trades open, we're going to create a new function for this. So what I've done is created this new function called getPrice, where we are going to get the price using the variable's current symbol and the order type. And note here that this is also going to be an export function. We're going to need the input symbol digits, which is what we have declared previously. I'm going to declare price is equal to 0. So every time we want to get the price, we need to pass through the order type. So if we're looking to buy, then we are going to use symbol info double to get the ask price of the current symbol. And that is going to be the price that we're going to submit for our order. And we're going to normalize this to symbol digits. Else, if we got an order type equals to sell, then our price is equal to this. And then finally, I've added in this else statement where if our order type is not equal to order type buy, order type sell, then our price is equal to 0. And that is because we are only looking at market buy and market sell for the scope of this particular risk library. Just to clean things up, I'm going to remove these brackets because we don't need them. That makes it a bit more clean. And then finally, I'm going to include a print statement where price is equal to price. And our return value is going to be returning price. So if I compile this, I've got a couple of errors. So if I go back here, our magic number is no longer ID, it's actually magic number. So let me change that. And our next one, lot size, that is risk lots. That's right. And I'll change this to risk lots. Compile, and that compiles. And what I might do just for consistency, I've got risk lots here. Let me also return risk amounts. So I'll add this piece of code. So you can see here that we've also got risk lots being passed through. Whoops. Risk amount being passed through. Cool. So if I compile this, that compiles. So now with that done, I can now go back and get these newly created export functions. I'll copy this process trades export function. I'll go back to my expert advisor. I'll now add in this newly created function, remove that, export. So now we've got our ulong process trades function, and we also need our get price function. I will remove that export and paste in all of that. Now, before I compile, just to check if everything's working. That looks okay. If I compile, I might get some errors, and that's because now we've changed our process trades open function within our risk library. So now this is actually throwing an error. So here I can see here that we need to pass through a string, which is the current symbol, an enum order type, which is what we've got already there, an integer, which is our magic number, our double, which is our lot size, and then we got a double, 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 which is our entry price, stop loss price, and our take profit price. So if I go back up, just so we can refer to the code, I'm going to copy this. I'm going to go back through our functions. Now, just a note here that this is the function actually when we are processing the trade itself. I'm just going to create some space. I'm going to paste in our newly created function here so we can refer to it. So that's fine. Order type, that's fine. Order type by, magic number, that's fine. Our lots size, which is our risk in lots. So in this particular case, we need to specify our entry price. We need to specify our stop loss price and our take profit price. In this example. And so that matches the variables that we have defined previously. So I can actually remove this code. And that's perfect. Now you'll recall that these are the actual variables that I did remove previously. So I'm going to need to add these back in. Now our take profit price and stop loss price in this particular expert advisor is going to be very simple. It's going to be equal to 0. And that is because in this particular expert advisor, we are not using a stop loss or a take profit. However, in this case, our entry price is now going to be equal to the newly created function that we have just made, which is going to be get entry price. So if I copy that, equal to this value, get entry price. Of course, we don't need this and we don't need this. And I can move that up. And that is going to be the values that we need to get first before we process trades, which is this function over here. We need to do the same thing for shorts, where when we've got enter short trades, we just need to add in the lines of code that we've just created above here, where our entry price is equal to get price, stop loss and take profit still 0. And we need to change the parameter count here. So all we need to do is copy this, come down here and paste that in here just so we have the right parameter count. And with a bit of luck, we still get an error. Whoops. We need to pass through the order type. What I might do is actually create a enum for this, which is going to be enum order type by is equal to order type by. And then I can change this to this. I'll space that out. And I'll do the same thing for our short trades. And this is now order type sell. And that's order type, and this is now order type here. So if I compile, that compiles with no issues. And let me space that out. So everything looks like it's working and compiled fine. The last addition that we need to do within this particular expert advisor, where we've got the process trades, is process trades closed. So I'm going to cut this. I'm going to go back to our risk library. And in some blank space, I'm going to paste our code that we've just copied across. I'm going to give it a new header, process trades closed. I can remove that. And this is going to be a void function where we're not going to be returning anything, but what I do need to add in is just return at the end, where for this particular case, process trades closed, which is the exact same code that we copied previously, is going to pass through the current symbol and the ticket that we want to close. And of course, we're exporting this. We're going to close the current ticket using the trade.position close ticket. And we're going to print that this was successful, that the trade was closed for the ticket on the symbol, current symbol. And we are going to return the value. And that's compiled fine. Finally, of course, I need to copy this line of code. Come back to our risk library, import section, paste that in, and close that. That compiles, and that's compiled no problem. I'll just clean this bit of code up. Compile one more time. That's good. If I go back down to the bottom, this process trades custom function has now all been transferred across to our risk library. So that's been removed. And I also now do not need, as mentioned before, our include functions for our trades in this expert advisor, because all of our trades are now processed within our risk library, so I can remove that too. Compile. So now this expert advisor is now fully utilizing our risk library. Now, admittedly, there was a bit going on there to transition our code from our existing expert advisor across to our risk library. However, if done correctly, we should have been successful in actually transitioning all of our risk management or trade processes across into our risk library. So now we can start utilizing our risk library within this expert advisor. Now, in theory, this should actually be the same expert advisor where we left off in our last tutorial, because this particular expert advisor does not take into consideration a stop loss or a take profit or any of the additional risk management that we have just coded up in today's tutorial. However, of course, we're going to be building upon this expert advisor in just a moment. Saying that, let's go into MetaTrader and actually test this within MetaQuotes to make sure that our risk library is working appropriately and we are getting the same results compared to what we have been coding up in our previous tutorials, but now utilizing the risk library. So now we've got our expert advisor selected, which is our multi-symbol indicator EA version 3.01. I've got here our symbol that we're going to be testing, and I'm going to change this to Euro USD. We've got everything disabled, visualization mode equals to on. Now in our input settings, we've got our symbol being current symbol, our lot size being equal to 0.1, and we're going to simply be using the MACD using B conditions on 12, 26, and 9. I won't go through what this indicator EA actually does. That was from our previous tutorial. So if I go to start, looks like our expert advisor has ran correctly. Our expert advisor indicator has initialized properly. So we'll just simply go through here and find a trade. And there is a trade, and it looks like it's processed correctly. Now for this particular case, we are taking a long trade when we have a crossover above the zero line. So we're actually taking opposite trades to what we're typically used to. We see here that our expert advisor has processed our trades properly. So we can see here our price, which is the entry price, has been calculated on the entrance of the particular expert advisor. And that is the price that was processed when we entered the trade. We've got here our point value being calculated. So our point value is equal to 1. So it looks like that's been calculated fine. And then we've got here our first scenario being calculated, which is our entry price, stop loss price, our risk points, our risk lots. So our risk amount, which is just off screen. So our risk amount is actually a very big number. Now the reason why it's a very big number is we don't actually have a stop loss or a take profit price within this particular expert advisor, as you can see over here, because our stop loss is actually, well, in theory 0. So our risk amount is well, quite large. So that is just what's happening in this particular expert advisor. So our risk amount doesn't really mean too much. We're not actually risking this amount, of course, because we're going to exit the trade when we get an opposite signal. So we're not actually risking the whole amount. So I just want to call that out there. Then we have all of our buy conditions within our journal, as we can see here. And then finally, we have here our trade was processed, where we've got an order type 0, which is our buy order type, our risk lots, which is 0.01, which is a fixed risk lot position size. Our risk amount is also this very large number here. So this is actually in effect working exactly the same as what we were previously doing. That should be another trade, and yes it is, where we're taking trades based on the indicated conditions with no entry price and stop loss price within our expert advisor. So this expert advisor doesn't really, well, I don't think it would make any money, but this is just for testing purposes. And we can see here that everything looks like it's working fine. So it looks like our code is working exactly as expected, comparing it to what we left off in our last tutorial. However, this is now utilizing the risk library. So I just want to go back into the code and clean a few things up, and that is going to complete this particular expert advisor being an expert advisor that has no stop loss, no take profit, and utilizes a fixed lot size. And that is going to be the first expert advisor of 5 that we are going to complete in today's tutorial. So let's finalize this expert advisor template within MetaTrader. Now just quickly to clean up and finalize our code, we've got here expert advisor version 3.1. I missed that. Version notes is the same here. Patch notes is the same. I just want to call out here that we're also going to be using the template file and the strategy conditions as per below. So strategy conditions in this particular case, as we've shown, we are using the exact same conditions as what we coded up previously, where we're not using a stop loss or a take profit in this instance. Position size is fixed. Our properties remain the same. Our libraries are all declared above, which is going to be the same for now. However, we're not using all of the functions for this particular expert advisor. Our risk amount, we're not using. Our risk lots, we're not using. Our risk stop loss, we're not using. We are using process trades. We are using get price, and we are using process trades close. So if I compile this, that compiles with no errors. We will be using some of this functionality in newer versions. We now go onto our expert advisor setup section. I'm going to add in one line of code, which is something that I just learned the other day, which is going to be a grouping section. So we're going to group this section called expert advisor setup. We've got a section here called risk metrics. And I'm going to create a new grouping here just above risk metrics called risk inputs. And I'm going to group this risk inputs here called group risk inputs. And what I'm going to do in this case is actually declare all of our risk metrics in this section here. Where we've got here our order type equals to order type, our entry price, stop loss, take profit, risk amount, and our starting equity. And notice here that we've got lot size. I'm actually going to change this to risk lots is equal to 0.01. Now that does mean that I need to change our risk lots in our process trades function here. So if I go back down to the process trades, our lot size is actually going to be risk lots. So I'm going to change that here just to keep things consistent with how we've coded up our risk library. And notice here that we don't need to declare our variables here. This keeps things a little bit cleaner. Now I'm still going to keep here our stop loss and take profit prices as 0.0, even though they were already declared previously as 0.0. This is going to be a good placeholder for us to also calculate our stop loss and take profit prices when we do use some of our newly created risk library. So I'll go back up and I'll just move risk lots here. starting equity, I'll move here. I just kind of like how that's positioned. And then finally, I'm going to move our magic number. And finally, I've just moved our magic number to this section here. So that's consistent with our risk metrics section. Probably remove that. So if I compile, I'm getting an error here, and I didn't change this enum order type. I need to change that and change that. So now you can just see that we've got order type buy, order type sell, all the different variables here. So that's all fine. Compile, and that compiles. If we go back up just to do our groupings, I'll add in another group, indicator select. And that's going to be for our indicator selection section. It kind of rolls off the tongue quite nicely. And that's all the same. And then we get into our onInit and onDinit functions. So if I compile, that all compiles. So now if I go back to our expert advisor, you can see here now we've got these grouping sections, which keeps things nice and clean. Where we've got our tradable symbols, which we can specify as current, or we can enter the current symbol here. We've got our risk inputs, where we've got our magic number and our risk in lots for this particular expert. And then we've got our indicator select, where we've got our indicators that we can select here. So scrolling back up. So now we have, for this template file version 3.01, we are using the indicator and risk library for these following conditions, where we're looking for long and short trades. We have one entry trigger, two filters, and one exit trigger, where our exit trigger is also our filter indicator 1. We are not using a stop loss or a take profit, and we're using a fixed position size, which is defined by our fixed lot size. And just to clarify, we've got here our fixed lot size or risk in lots being 0.01. Now this is an input which can be adjusted by the user. And just to confirm that we have here in our exit trigger conditions, our exit indicator X1 is equal to our input enum F1 or filter 1. So this is now your working template if you want to use those particular strategy conditions. And note here, you don't need to change anything within the code. You just need to import your libraries. And the only thing you need to change here is your indicators that you're using within the indicator library, which is super, super convenient. So that is our template number 1. So now that is the very basic template that we have completed for today's tutorial. That now sets the foundation to then build upon that, and most specifically building upon that expert advisor, which now utilizes appropriate risk management. So in our next template, we are going to be creating an expert advisor which takes into consideration a stop loss, which is derived from an on-chart indicator. Now this on-chart indicator could be a moving average, which is what we're going to be using today, but it also could be a different on-chart indicator like a parabolic SAR or parabolic SAR. So that takes into consideration our stop loss. So we can also utilize now a take profit, where we can set a take profit target utilizing a risk reward ratio. So we're going to include that as well. Now, finally, we are also going to need to calculate our risk amount, which is how much we're willing to risk every single trade, which is going to be derived through a percentage risk of the account. Now, this percentage risk of the account could be a fixed amount where we're calculating our risk at the start of the expert advisor initializing, and that is a fixed amount. Or we could be using a calculated percentage of the account every time a new trade actually eventuates, and that is going to be a compounding risk method. And that is going to be everything that we need to actually calculate our lot size, which is derived from our risk amount, as well as the positioning of our stop loss relative to our entry price. So there's quite a bit to add into our risk library because we don't have some of these functionalities yet. So let's go ahead into MetaTrader and make the appropriate changes, not only to our expert advisor, but also to our risk library. So now we're going to create a new template. I'm going to go File and I'm going to save this as version 3.2. I'm going to change this code here, 3.2. This is going to be patch notes 3.2, which is going to be as the same, see below. So if I go to our strategy conditions, now we are not going to be using a stop loss and take profit. We are still going to be using the same indicator conditions above. However, instead of not using a stop loss and take profit, we are going to be using a stop loss and take profit, and we are also going to be specifying some position sizing. So by the end of this section, we are going to be creating this following condition where we are now going to be using a stop loss, which is going to be using the filter 1 indicator, and this must be an on chart indicator. So let's say an exponential moving average or a moving average of the like, so we can get the price from our indicator to be our stop loss. We are going to be using a take profit, which is going to be calculated from a risk reward ratio. So this is something that we're going to have to add into our risk library. We're going to be using position sizing, which is going to be calculated as a percentage of the account. And we can also specify whether we want to be using fixed or compounding methodology. So that's what we're going to be using for this particular strategy conditions. So this is going to be scenario 3.02. We're going to be adding in some risk library metrics. So we're going to come back to this. So to start off with, we need to add in some additional input functions. So in this example, we're going to be calculating our lot size. So that now is not an input function. And I'll just make that 0. We're going to be specifying whether we want to be using a fixed or compounding method. So I've included this function here, or this enum function, which I've just created, called risk method, fixed or compounding. And now I'm going to create that as an input risk method, called risk method here. In this particular case, I've also specified that we're going to be calculating our position sizing based off a percentage of the account. And now this could be a percentage of the starting equity of the accounts or a percentage of the current equity of the account. And that's defined by either using fixed or compounding methods. So that is going to be a percentage of the account, and I'm going to be specifying a default value of 0.01. Our risk reward ratio is going to be risk reward ratio of 2, but again, that's an input, so that can be adjusted. So the very first thing I need to do, if I scroll down to the onInit function, this is not something we did in the previous expert advisor, but we need to declare the starting equity of the account. And the starting equity of the account is done through the onInit function. So when the expert advisor runs, the starting equity is equal to account info double account balance. If I compile that, that compiles and there's no issues there. So now we can go down to our expert advisor itself, and we can start off with our long trades. So our order type equal to buy remains the same. Let me just space that across so it's a bit cleaner. So order type remains the same. Our get entry price, or our entry price, is the same. Now here we have a stop loss price. Now for this example, we're using filter 1 as our stop loss price. So in this particular case, what we can do is actually use the get indicator value function, which we have coded up in our indicator library. So if I go up to the top, get indicator value is the function that we need to be using. So if I go back down, so our stop loss is going to be get indicator value of our indicator handle. Now in this case, we're using the filter 1 as the indicator handle. So that is simply going to be indicator handle F1 for the symbol loop. And the buffer value, and this is the value of the indicator that we want to return, because this is going to be using a exponential moving average. There is only one value that the indicator can return. So that's going to be at buffer position 0. Now I can do the same thing for our stop losses for our short trades, and that is working as it should. I compile, and that compiles with no issues. Going back up to our long trades, we now need to specify a take profit, and we mentioned that we are using a take profit of 2. So let's create a new function within our risk library that's going to allow us to get the take profit price using a risk reward ratio. So now going back to our risk library, I'm going to add in the following custom function, which is called get take profit. Now what we need to get the take profit value is the current symbol, the order type, so the direction that we are trading, the entry price, the stop loss price, and a risk reward ratio. So this is going to be quite simple, where we need to find the symbol digits, which is typical for a lot of the calculations that we have done today. We need to get the stop loss distance, which is the entry price minus the stop loss price. And I'm using again math.abs. Now note here that I'm using stop loss as a distance of price and I'm not using risk points. And that is because we are simply calculating the distance in price from our stop loss, and then we're going to use that distance to then find the take profit. So we don't need to convert anything to points. We're then going to initialize the take profit price, and then for order types equal to buy, our take profit price is equal to the normalized double of our entry price plus the risk reward ratio times by our stop loss distance. So this gives us our take profit for our long trades. And we got the exact same for shorts. However, this time we are subtracting the risk reward multiplied by our stop loss from our entry price. Now, if there's any errors, meaning that the order type is not equal to buy or sell, then we're going to be returning take profit is equal to 0. We're then going to include a print function, take profit is equal to, well, take profit. And then we're going to be returning the value of take profit. I compile, that compiles, so that's pretty straightforward. I'm going to copy our newly created function, go back to our expert advisor, scroll up to the top. I'm going to add in our newly created function, which I'm going to just add in here. So get take profit, current symbol, order type, entry price, stop loss price. And our risk reward ratio, I remove the export and I add in that. So that all compiles. So now I can copy this function, come down to the bottom where we've got our process trades. And I can replace this take profit with our newly created function. I will remove the variables, because I don't need to declare them again. Our stop loss was calculated previously. Our entry price was calculated previously. This is an input function. This is already declared previously, and current symbol is of course the current symbol which is declared. So that looks completely fine. So I go down here and I copy the same thing for our shorts, compile, and that looks like it's compiled. Now I'm going to scroll up to the top where we've got our indicator setup section. For this particular case, for all this to make sense, I'm going to be using MACD, taking the typical signal where we're going to be going long on a typical bullish condition. So I'm just going to replace our values here. So what I'm going to do is replace underscore B underscore with underscore A underscore and replace all. And that's replaced all of the conditions here for our MACD input as well as our indicator input. Now for this particular expert advisor to work properly, I'm also going to remove the NA option here. So the user can only specify one of the MACD indicator parameters here, as well as I'm going to remove the NA option for indicator F1, because if that option was selected as we're using it for our stop loss and likewise calculating our take profit, If we don't have an indicator selected for F1, it's going to throw some errors. Now note here that these are all on chart indicators, so we can use this particular expert advisor to calculate our stop loss position. So if I compile, that compiles. So that's our indicators set up properly. Now the very last thing that we need to do is of course set up our risk management methodology. So that means that we are going to be calculating our risk amount, so how many dollars we're willing to risk per trade, by using a percentage of the equity within the account. Now this could be the starting equity or fixed risk methodology, or this could be the equity of the account at any time when we're taking the trade. So this would be a compounding methodology. So what we need to pass through is the risk method and the risk percentage. So if I go back into our risk library, I'll go back down to the bottom. And I'm going to create a new function called get risk amount from the account. Now note here that this is going to be the same variable called get risk amount, which we have used previously in our other scenario, being our scenario 1. Get risk amount. However, this is going to be a different method to get the risk amount. We're not going to be using this method here. We're going to be using a new method. And that new method is going to be getting the risk amount from the risk method, which we have defined being either fixed or compound, the risk percentage, so the risk percentage of the account we're willing to risk, and then the starting equity of the account. So that is simply going to be done by first declaring the risk amount equaling to 0. If we are trading a risk method using fix, then our risk amount is going to be a percentage of the account, so risk percent, multiplied by the starting equity. Else, if we're using a compound risk method, then our risk amount is going to be equal to the risk percentage multiplied by the account balance at the time that we are taking the trade. And this is what's called a compounding method. Else, if the risk method is not equal to one of these two, then our risk amount is equal to 0. And then finally, I just print out the risk amount is equal to, well, whatever this is, and then we return our risk amount. So in essence, this is what we're going to be using to calculate how much a certain percentage of the account is, and that is how much we are going to be risking per trade. So I'm going to copy this, go back over to our expert advisor. I'm going to add in that custom function. I'm going to remove that export, and I'm going to close that function there. So what I need to do finally for this expert advisor to work is copy that code, go back down to my functions here. We're going to start off with the long trade. So we've got an order type, entry price, stop loss price, and a take profit price here. What we now need to define is our risk amount. So risk amount, which is already defined, is equal to the newly created function that we have just created. So get risk amount using the risk method, the risk in percent, and the starting equity of the account, which is calculated. If I compile, we just have a warning. So I need to specify enum to string. That's just a conversion warning. So if I do that, that should remove that warning. There we go, and that's no issue at all. So now that we have the risk amount defined, we can now find the risk lots is equal to, and now this is where we start using that function, which was the get risk lots function. Now previously we didn't have to use it, so it's commented out, but I will put it back in. So it's this function here, get risk lots. So if I go back down, and paste our get risk lots function, I'll remove all the variables here. There we go. And so we can now calculate or get the risk lots based off the current symbol, the entry price, which we have defined, the stop loss price, which we have defined, and now the risk amount, which has been calculated previously by using, again, another function, but it's using the get risk amount function that we've just created. What I can do is copy these lines of code, go to our short section and paste that in. And that's the exact same lines of code that we have used before, and I don't have to make any changes. So if I compile, that compiles with no issues, and that should complete this section of the code. So if I go into MetaTrader itself, I've got here version 3.02. I've got here our functionality, where now we've got here under risk inputs our magic number, but we now have our risk method being fixed or compounding. I can select that. Our risk percentage, which is a percentage of the account. So this is going to be 0.01, and we are targeting a risk reward ratio default of 2. We now have here our parameters for our indicators being MACD conditions A for, well, this MACD. And I can change this to, let's say that. And now we are taking our stop loss based off the EMA A of 100. Now note here that because we have this as a filter as well, we are only going to be taking trades when our closing price is above the exponential moving average. So that is going to be sufficient for this expert advisor to ensure that we are taking long trades and setting our stop loss in the appropriate positions. So let's see how that actually operates. There we go. So now we have a trade here, just to show that we had a bearish crossover where the crossover has occurred above the 0 line. Our price is also below the exponential moving average, which means that is where our stop loss is. Our stop loss is above the price. So this is taking a short trade, and we can see here that we're targeting what looks to be a 2-to-1 risk to reward ratio. You can see here just by the numbers, our stop loss is -2252. And our take profit is 4504. We can see here that our calculations have been done, where our handles have initialized properly. We have taken a trade here where price is equal to 1.0118. Our take profit is set at a risk reward ratio, which we have defined previously. Our risk amount, which is 500. We are trading an account of 50,000 United States dollars. So the risk amount should be calculated as 1% of $50,000, which is $500. So that's working fine. Our point value, which is calculated, which is fine. Now this is important here, where we are calculating our entry price, our stop loss price. So our risk amount is 500, and note that this is the same value as this risk amount. Now, what's really good to see is that these are actually two separate calculations. Remember that our risk amount was defined previously as the risk amount from our equity within the account. However, this risk amount is calculated from our stop loss and entry price. So that means that our stop loss, entry price, and our lot size has been calculated correctly. So it's really important to see that these two are the same. We've got here for ticket number 2, symbol Euro USD, order type equal to 1, our risk lots is equal to 0.22, and our risk amount is equal to, well, almost $500. So that looks like it's working completely fine. So we can see here, hit the take profit. You can do it. There we go. So it's hit the take profit, and this means our equity in the account should actually be $1,000, more or less $1,000, because we are targeting a risk reward ratio of 2. So we are risking $500, and we have made in this trade, because it's profitable, $1,000. So we know that this is working quite appropriately. Great, so that is our second template done, and honestly our first template where we've utilized appropriate risk management to build a complete expert advisor. So now we can actually utilize this same template and make a new one, only this time not using a stop loss which comes from a on-chart indicator, but actually uses an ATR indicator which calculates the volatility of the market, which then allows us to set a stop loss. So that means that we need to add in the ATR indicator, which is going to be coming from our indicator library itself, which we have already coded up in our last tutorial. So I'll show you exactly how to do that, as well as adding in ATR multiples for us to then set our stop loss, but also set our take profit as well, so that we can have appropriate risk management in that regard. So let's go back into MetaTrader and start coding up our very own ATR expert advisor. Okay, so in this example, I'm going to go to File, Save As, and I'm going to create version number 3. So I'm going to change this to patch number 3. And in this particular example, the strategy conditions, we're actually going to now be using an ATR indicator to get our take profit and stop losses. And this is going to be aligned to the No Nonsense Forex money management. So we're going to be taking stop losses and take profit using an ATR multiple. Of course, we need to bring in the ATR indicator. The position size is going to be calculated based off a percentage of the account, which we did in our previous patch, number 2. And the user can, of course, select compounding or fixed position sizing. And again, we did that in our previous patch. So all we need to do here is add in the ATR indicator and then specify the take profit and stop losses based off that ATR indicator and of course the ATR multiple. So this is version 3.03. And if I scroll down, the risk library is actually the same here. So that remains unchanged. Going into my risk input section, all of this will remain the same. This risk method remains the same. We have here our risk reward ratio, which we're no longer using. So I'm going to comment that out. Our risk percentage is the same. So if I scroll down to make some room, what we're going to be doing is adding in our 2 new variables, one as a take profit ATR multiple and one as a stop loss ATR multiple. We're then going to specify the ATR indicator as a string. And this aligns to our indicator library functionality where we're going to specify the ATR underscore conditions A underscore 14. Our note here for the ATR currently in the indicator library, the ATR is not used as a confirmation trigger indicator or a filter indicator. So the conditions A doesn't really mean anything, but just to pass through the actual indicator, just so the library can make sense of it, we need to specify something here. So we're just going to specify the letter A. Now with our string declared, we also need to set up our indicator value. So indicator value ATR, and then our indicator handle ATR. Now I've specifically chose to put our indicator values here rather than in our indicator string setup section, because I want to separate the indicators that we are using to take trades from the risk management, which is the ATR indicator in this instance. So with that done, we now need to add in our indicators into the expert advisors on init function. So on the on init function, we have here our multi-symbol expert advisor functions, which are all custom functions, which are specified within the expert advisor itself. So if I scroll down, I'll go to our indicator library setup. So we've got here our array resize. I'm simply going to add in a new line. I am going to copy that line and add it in here, but instead of indicator handle E1, this is going to be indicator handle ATR for the number of symbols. I'm going to do that as well for the release. Copy that, paste this, go ATR. And then finally, we have here our indicator handles set up for our on init function. So if I copy this, paste this, and I've got here indicator handle ATR. And this is going to be get indicator handle for the ATR, the symbol array for the period. I compile this, we're getting some errors, which is the risk reward ratio, which we will change, so that's fine. But in terms of setting up our ATR, that looks all good. So now our ATR is being fed into this expert advisor. It's all set up. Now what we can do is get to the indicator values. what we have here is the get indicator signals, where we're getting the indicator signals for our entry 1, filter 1 and 2, and our exit indicator. A new section above, which is called get indicator values, and this is different from get signals. So I just want to make that distinguishation, whatever the word is, and then put in the indicator value ATR. And this is going to be get indicator value. So this is getting the indicator value from the custom function, which we have highlighted in a previous example. We're going to be passing through the indicator handle ATR for the symbol loop, and we're going to be returning position 0. So this is the exact same example or function that we used when getting the stop loss for our moving average, for example. So scrolling down, we have here our entry longs. So if all of these conditions are true, then we are doing this. So order type equals to buy, that remains the same. Entry price remains the same. Our stop loss in this example is not going to be the stop loss of the get value of our indicator filter 1, which is what we did in our previous example. So we'll remove that. Our take profit is also not being set as a risk reward, so we're removing that. Our risk amount remains the same, our lot size remains the same, and everything else remains the same. So in this example, we're only adjusting our stop loss and take profits. So in this case, our stop loss price can be easily calculated in here, where our stop loss price is our entry price, which we've just found, minus our indicator value ATR, which is the indicator value that we have just specified above, multiplied by our stop loss ATR multiple. And recall that our stop loss ATR multiple is going to be equal to 1, and our take profit is also equal to 1. Now, if you wanted to change this so that you take it into account, let's say a risk reward ratio, then you wouldn't actually use this risk reward ratio of 2. You'd simply just specify the multiple as a multiple of 2 times the stop loss multiple here. So this is still taking into account a 2 times risk reward ratio in this example. So we can specify it as that. Now here we have our calculation. However, we of course need to normalize this. So we normalize this to the number of digits, and just to keep things on one line, instead of declaring a variable for digits, which we have typically used quite a bit, I'm just simply going to add in the function here, symbol info double, current symbol, and the digits here, just so everything remains as one line and I don't have to get the symbol digits again. I can now copy this and do the exact same thing for the take profits. However, this time we are adding the indicator ATR, and we are now using the take profit multiple. Like so. I can now copy all of this and then go down to my short trades and override what we had there previously with our newly created functions. And instead of entry price minus, we're going entry price plus for our stop losses, and we're going entry price minus for our take profits. And I compile this, and that fully compiles. So now if I go into MetaTrader itself, I've got here version 3.03. I select that, and I can run the Expert Advisor. So now we can see here we've got the MACD, we've got here the moving average, and we've also got here now the ATR. And we've got a trade straight away where we can see here that we've got a crossover of the MACD, and that's a bullish crossover. Price is above the exponential moving average, or whatever moving average this is. I don't even know what I selected. And we've got here an input of an ATR multiple of 1 multiple for our stop loss and 2 multiples for our take profit. In our journal, we can see here all the calculations. Again, as shown, we've got a risk amount of 500. All the calculations are done here, so I won't go through all the details. but we can see here that when we process the trade, we've got here a long trade or order type 0. We're risking 0.51 lots, which is what has been calculated, and this gives us a risk amount of 505, which is close enough to $500. We play this through. That was a loss. Oh no, that wasn't a loss. That was actually, the trade actually took the opposite signal. So we are more or less break even. Actually made $60. That's fine. Let's see if we've got another example. There we go. And we've got to take profit. So we should be $1,000. There we go. We're $1,000 ahead. So it looks like, again, our risk reward ratio of 2 to 1, not really a ratio, but our multiple from our ATR multiples of our stop loss and take profits are working quite well. Our money management or risk management seems to be working well too, where we are risking the appropriate risk amount being $500, and then our calculated lot size is being calculated accordingly. So this is a very common way to manage risk, where we're using an ATR risk management technique. So now we are definitely moving. We have created our third expert advisor for today's tutorial, which utilizes an ATR indicator to calculate the stop loss, but also the take profit. However, why don't we take this a step further, where we're going to be utilizing the ATR not only to take the stop loss, but also to now trail the stop loss. So what we're going to do is add in a new function within our risk library that will allow us to take a trailing stop loss for our expert advisor. That means that we're going to be creating a new function which is going to see whether our new stop loss price is more favorable, and if it is, then it's going to modify the trade. Now I just want to highlight here that we are going to be using the newly created trailing stop loss function within our risk library for the ATR expert advisor that we have just created. However, I just want to call out here that the trailing stop loss function that we're going to be creating isn't specific to just the ATR. You can use this for our second expert advisor that we did create, where you could potentially trail a stop loss using an on-chart indicator like a moving average or like a parabolic SAR, which is the example expert advisor number 2. So if that's something of interest to you, then I will leave it up to you to have a play around with our expert advisor number 2 and add in a trailing stop loss similar to what we're doing now. So let's go back into MetaEditor itself. Firstly, going into our risk library and finishing off our risk library functions, being the trailing stop loss, and then make the appropriate adjustments to our expert advisor. So now let's take this to the next level. I'm going to create a new patch, save as patch number 4. And let's add in a trailing stop loss. And this is going to be the last part to complete our entire risk library. So this is going to be version number 3.4. So patch number 4. And in our strategy conditions, we're going to be adding in our trailing stop loss. So we're going to be taking stop losses and take profits using the ATR multiple, exactly the same as before. We're also going to be using the ATR to trail our stop loss. Our position size is going to be calculated as a percentage of the accounts, and we're going to be allowing the user to select either fixed or compounding methods. So the only difference here in version 3.04 is that we're going to be adding in a trade modifier. So the way that we're going to do that, of course, is through our indicator library. So we're going to be adding in a process trades trailing stop loss. If we're going to go into our risk library, we're going to go to some new white space, going to create some room, and we're going to create the following function. So we're going to be processing a trailing stop loss, and we're going to call this function process trade TSL for trailing stop loss. The only things that we need to put in here is the current symbol, the ticket that we're going to be processing, and the proposed new stop loss value. And of course, this is going to be an export function. The very first thing that we need to do is actually select the current tickets and the ticket that is being passed through this particular trade. And we do that by using this position select by ticket function and put in the ticket. This ensures that the following variables that we are going to declare is being taken from the appropriate ticket. Now, for whatever reason, if there is no ticket that is there to be processed, Then we have this exclamation mark, which is just some error handling. So if this is not equal to true, so there's no trade being processed. So if this is not equal to true, then we are just going to return. However, if there is a ticket, then we're going to proceed. So the variables that we are going to get from this ticket is going to be the direction of the trade, and that is done by using the following. We're going to get the current stop loss of the current ticket, and we're also going to be getting the current take profit. So now what we want to do is to check if the position direction is long, so if we're taking a long trade, and if we have a new stop loss which is greater than the current stop loss. And this is done by using the following if statement, where if the direction is equal to long and our new stop loss, which is being fed through our function here, new stop loss, which we're going to be calculating in our expert advisor. If our new stop loss is greater than our current stop loss, that means that we want to modify our stop loss for the particular position. So we do that by using the trade position modifier function, which is again a function within the C-Trade library. And we need to specify the ticket, the new stop loss price, and then the current take profit price. Again, we're not modifying the current take profit price, so this is going to remain as is, which we've declared here. So when we're modifying the trailing stop loss, we still need to specify the take profit. And then we're going to have a print function where we're just going to print the ticket for the symbol, and then the stop loss has been adjusted to the new stop loss price. Now we can do the exact same thing for shorts, where we've got here, if the position direction is equal to position type sell. So we're in a current short regime, and our new stop loss price is now less than the current stop loss price. That's when we want to modify the position. So if this is true, then we modify the position using the same functions above, and we have the same print statement too. Now finally, we just return here, but we're not returning any value because this is a void function, so we just return. We compile, that compiles, and that is our trailing stop loss created. What we can do now is copy this code, go into our expert advisor, and add in at the bottom this line of code, which is process trades trailing stop loss. Now again, we remove the export and we close the function. So now if I compile, that compiles. Now what we need to do in our expert advisor is actually specify the conditions for us to run this function. And this is a new section that we need to create for modifying our trades. If I go now to the onTick function, we have here the conditions for when we want to enter longs, and this is the conditions here. Then we've got an else if statement. This is the conditions when we want to enter shorts. And then we have another else if statement. This is the conditions where we want to exit trades. And then following all of that, we have here our symbol metrics. Now I'm going to create some space just above symbol metrics, but before the exit trades, and I'm going to include another else if statement. Only this time we're going to be using this for modifying the trades. So in this scenario, if position direction is equal to long, so if we're currently in a long position, then we want to be processing potential modifiers. And then likewise, if our position direction is equal to short, then we too want to be processing some potential modifiers. So within the function over here, we want to be specifying the order type. We also need to get the new price. Now this is not the entry price because we're not entering a trade, but this is the newly calculated price at the time that we run this function. So we're going to get the price. And then all we need to do is calculate a new stop loss price, which is equal to the same stop loss calculation that we've done previously for our long trades, which is this one over here. Our entry price minus the ATR multiplied by our stop loss ATR value, which we can see here. That's the same calculation. Now, finally, what we need to do is now call our newly created custom function process trades trailing stop loss, which takes in the current symbol, the ticket number for the symbol that's being traded, and then the new stop loss price, which is just calculated here. Now we can do the exact same thing for shorts, where for short trades, we have the same function. However, this is now order type sell. The price remains the same, and now the new stop loss is actually a minus and not a plus. If I compile, that compiles. Now, one last thing I want to do is actually allow the user some functionality to actually toggle on and off the trailing stop loss. So if I go back up to the very top where I've got my risk input section, if I scroll down to the bottom, I can add in a new input boolean, which is TSL, so is trailing stop loss. By default, it's equal to true, but the user can toggle this on and off. So then they can either use a trailing stop loss or not use a trailing stop loss for their particular expert advisor. Finally, with this input function, I need to go back to my conditions where we've got modify trades. So I now have here the else if statement, position direction is equal to long. But before that, I need to put in is trailing stop loss is equal to true, and then put an ampersand there. So now this is if the is trailing stop loss is equal to true, meaning yes, we want to take a trailing stop loss and our position direction is equal to long, then we go and process these functions. Likewise for shorts. If our is trailing stop loss is equal to true and our position direction is equal to short, then we process all of this. So awkward moment that I realized I have put this around the wrong way. When I went to test it, it didn't work, and that's just the beauty of doing this somewhat live. That the new stop loss for longs is actually price minus our indicator value, our indicator ATR value multiplied by our stop loss longs, and this is of course plus. I had a bit of a moment there, but I compile, this compiles. Now, with a bit of luck, if I go back to our expert advisor. Okay, so we enter a trade straight away, similar to what we did before, where we've got our bullish crossover of the MACD. We've got price above the exponential moving average, which is this red line here. Our stop loss is taken at 1 ATR away from the price, and our take profits 2 ATRs away from the price. So now when we go forward, if we are reaching a new high in price, then our bottom line here, which is our stop loss, should move up in this long example. And we can see here that it has ever so slightly. If I go back to our journal, we can see here that the trades look like it has processed quite fine. And then we have here a position modify from our C trade where we have modified this stop loss, and we can see here that we've got our print function, ticket 2 for symbol Euro USD, stop loss adjusted to this value here. You can see here if it does it again, I think our stop loss is adjusted again, and maybe slightly again, maybe not in that example. And then we have again, in this example, it's basically break even, similar to what we did before. We can wait for another trade, which we do have a short example here. And we can see here that that adjusted on the next candle, and it adjusted again. And then the take profit has been taken. So we can see here that this looks like it is working accordingly. If I wanted to be double sure, I can actually widen our stop loss and take profits using the variables here. So I can take a stop loss of 2 times the ATR and a take profit of 4. And we can see here that our take profit and stop loss actually has widened quite a bit. So we can see here that our take profit and stop losses are still adjusting. And there we can see it has adjusted. Now, even though we've got wider stop losses and wider take profits, the amount of profit that we are making, well, the amount of risk that we are also risking remains the same. So if I go back to our journal, we can see here that our risk amount is still $500. And we can see here that everything is working quite fine. Now, one thing to note is that we are using fixed money management. Let's see what happens when we're using compounding. And in this example, I'm going to toggle off the use of the trailing stop loss just so we have a cleaner journal. And note here that this is actually the same functionality as our version 3.03 where we didn't have the trailing stop loss coded in. So if you just wanted to use this version, which I do recommend, and you have the choice of using a trailing stop loss or not, you can just go straight to this version. Now, to test to make sure that the compounding risk method works, I can go to the journal. Straight off the bat, our risk amount is $500, which makes sense because our 1% of $50,000, which is our current equity or our starting equity, is 1% of that is $500. So in this particular case, we basically did break even at $50,000. So now when we go to process the next trade, our risk amount is still $500. However, in this example, I believe we do make a profit. There we go. So now our balance is $51,000. So when we go to take the next trade, which happened very quickly, but we'll see and look at the results. We can see here our last trade was $500. But now we can see here our next trade, which was taken, the risk amount is now 1% of, well, what was there before, $51,000. So this is now taking a risk amount of not $500, but $510. So this is what, of course, is a compounding risk method. Again, the user can specify the method that they want to use. I personally use fixed methods for backtesting purposes because it's easy to calculate things like profit factor and Sharpe ratio without getting any skew within the timing of when your account is profitable or not profitable. So I tend to use fixed. So that is our fourth template done and dusted, and you might actually notice that we have spent a lot of time utilizing one of our scenarios, which was finding the appropriate lot size based off the risk amount as well as the risk in points or the risk distance utilizing the stop loss. However, there is one scenario which we haven't touched on, and that is going to be actually utilizing a fixed risk amount as well as a fixed lot size to then calculate where our stop loss should be. And this is going to be the fifth and final expert advisor that we're going to be coding up in today's tutorial. So let's go back into MetaEditor itself one last time and actually code up our very last expert advisor. So now in this final example, which is patch number 5, so 3.05, we have here the following strategy conditions, where this is going to be a little bit different to the ones that we were previously doing. The strategy condition here is going to be finding the stop loss, which is calculated through the risk amount and a fixed lot size. So this is going to resemble, if I go back to our risk management expert advisor, which we coded up at the start of this tutorial, this is going to resemble our scenario number 3, where we're going to be getting the stop loss price, which is from the risk in lots and the risk amount basically. Previously in our versions 3.2 to 3.4, we've been using more of scenario 2, where we are calculating the lot size based off the risk amounts and the stop loss price. So here we're kind of working the other way around. We're going to be finding the stop loss price. So I've already coded this up in this example here, where this is quite simple, where we are now using the function called get stop loss. Previously, we're using the function get risk lots. Here is the input section for the risk methods. Note here that I have removed the ATR as we're no longer using the ATR in this example. We're not using any ATR stop loss or take profit. We're simply specifying the risk lots, which we are using a 1 lot size fixed risk lots. And to calculate the risk amount, we're still using the same risk method previously, where we're using a percentage of the account. So if I go to the actual expert advisors long and short conditions, we have here the order type is the same, the risk amount is the same, our entry price is the same. However, here our stop loss is now taken from our function get stop loss, and we're passing through the appropriate parameters for this particular stop loss. Note here that I am not using a take profit value, so take profit is equal to 0. However, if you did want a take profit value, then you can do something similar to what we did previously and utilize a risk reward ratio and then calculate the take profit based off a risk reward ratio that is appropriate to your trading strategy. And this is the exact same for our shorts. If I compile this, that all compiles. And if I go back to our expert advisor, select our version 3.05. If I start the expert. So we can see here in this example that we have entered a trade. We have, if we go to our journal, our process trades has now processed a trade with a risk lot of 1 and a risk amount of 500. So here we can see that our stop loss is actually taken at minus 500 or minus $500 away from our entry price, where our entry price is at 1 lot. So we can see here that the risk model is working accordingly. I'd like to show you that if we instead traded not 1 lot, but 0.1 lot, our stop loss should then adjust to something that is greater. So for the exact same trading strategy, however with different risk management, we can see here that we have entered a trade. However, now we can't even see our stop loss. It's off the screen because our stop loss here is actually at minus 5,000. We can see here that it's actually minus 5,000, and that takes into account our risk management where we're trading now only 0.1 lots, which is still $500 amount in risk. So because we're trading a smaller lot size, we then can have a more generous stop loss price. And so our calculations appear to be working correctly. So I just want to note here where to find the actual files, which are within my GitHub. So go over to my GitHub and you'll see this very handsome man. Over here in MetaTrader 5 strategies, you'll be able to find firstly our experts. So if we go to the experts section, go to the complete EA templates section, and here you will have the 5 templates that we have completed at the end of today's tutorial. So you'll be able to go in here and go into the MQ5 files, and here you'll see all of the code within the GitHub, and you'll be able to see that for templates 1, templates 2, templates 3, template 4, and of course template 5. And note here that the strategy conditions are different for all the templates. If I go back, you'll of course need to get to the risk library, and that's saved within library. And the risk library can be found here. So if I go to the MQ5 file, this is the completed risk library. And of course you need to download that and save that to your libraries folder within MetaTrader itself, similar to how we've done within today's tutorial. And then finally, if you want the expert advisor that we tested for our risk management, go onto experts, go onto standard EAs, and then there is going to be a risk management EA. In here, risk management expert advisor.mq5. And this is our testing expert advisor, which we did complete within the first half of this tutorial. And that is it. We have coded up 5 expert advisors within today's tutorial that utilizes various different risk management techniques, which you can now start using as template files for your very own expert advisor trading strategies. Now, unfortunately, there was not one single expert advisor that I could create today, which encompasses all of these different various techniques. And that is because each risk management technique has its own unique value or unique ways to manage risk, and therefore it cannot all be done in simply one expert advisor. And I'm sure you'd be able to see that there would be many more than only 5 different ways that you would be able to manage risk, and therefore there would be more than 5 different expert advisors that you would probably have to create. However, hopefully all the other ways that you want to manage risk can all be done through the risk library that we have just created. And saying that if there is a different way that you want to manage risk, then let me know in the comment sections below, because we can also add that within the risk library as a future iteration or enhancement to the risk library itself. So now we have come to the end of our tutorial today, but also the end of our MetaTrader 5 Advanced series, where you now have the knowledge and the understanding to be able to code, test, and also optimize your very own trading strategies on multiple currency pairs, utilizing different indicators, indicator conditions, and indicator parameters, utilizing that indicator library that we've created, as well as now utilizing different risk management techniques for your expert advisors, depending on the trading strategy that you desire. So I do hope that you enjoyed coding with me your very own advanced MetaTrader 5 expert advisors and trading strategies. And I do hope that you did take away something or a lot of things within this particular series. So I would love to know what you did take away, or potentially what else you think could be added. Leave your comments in the comment section below. And of course, like, subscribe, do all of that good stuff. It really helps the channel out. And of course, as always, happy trading, happy coding, and I will see you in the next video.